Rumor has it, ARC has invested in XPeng Motors Holdings. Will they add NIO as well? Stay tuned to find out how the stock will perform in the near future. Hello folks, welcome back to the channel. Before we get into the video, don't forget to drop a like on this video and subscribe to the channel if you haven't already. Make sure that post notifications are turned on so that you never miss a video from us. Without further ado, let's dive in. CATHIE Wood continues to add to her XPeng Motors holdings after starting a stake earlier this month, despite the electric car maker's shares continuing to decrease over the past week. According to the most recent holdings data, Wood's ARK Invest has expanded its investment in XPeng by adding to its US-traded ADRs through its ARK Autonomous Technology and Robotics ETF. ARK-Q held 619,923 shares of XPeng ADRs worth $27.57 million, or 1.25% of the position as of December 15th. In ARK-Q's holdings, XPeng is now ranked number 30, up from number 34 before. The ETF position in XPeng was last changed on December 7th when it purchased 250,389 shares of XPeng ADRs for $11.02 million. ARK-Q held 527,652 shares of XPeng ADRs worth $24.42 million, or 1.06% of the position as of December 7th. It's no surprise that the stock is attracting attention with so many catalysts in the near to medium term. Is NIO on the radar of CATHIE Wood? CATHIE Wood, the CEO of ARK Invest and a longtime Tesla bull, may be warming to the Chinese electric vehicle company NIO, according to the fund manager's hints. In a March interview with Business Insider, Wood expressed her admiration for China's concentration on electric vehicles and stated that her team is investigating Chinese EV players such as NIO and XPeng Inc. As an ecosystem evolves around China, the Chinese government may be supporting a local winner in the EV market, according to Wood. NIO, XPeng, or even Tesla might win the Chinese EV race, according to Wood, who also believes that a homegrown company is more likely to succeed. At AFT Alerts, a Twitter account that analyzes institutional buying and selling, reported that 1,231,552 shares of NIO were purchased for $48.733 million at $39.57 per share. This had people's mouths wagging. In response, ecstatic Twitter users speculated that the purchase was made by ARK Invest. There's no proof that NIO shares were purchased by Woods' ARK Invest. The stock's gain could be attributed to positive analysis action. Subin Park, a CLSA analysis, started coverage of NIO shares with a buy rating and a $50 price target. The stock is also benefiting from broader market strength that has spread to the electric vehicle sector. So, what are these bullish factors that make NIO a must-have for ARK ETFs? For the rollout of its second-generation battery swap stations, NIO obtained a profitable collaboration with Sinopec, China's largest network of fuel stations. With Sinopec's help, NIO will be able to rapidly scale up its battery swap 2.0 station deployment across China. As an example, by 2025, the company intends to have installed at least 5,000 such stations across China. NIO would be able to lock in a huge number of current and future customers to its ecosystem as a result of this decision, thereby creating a monopoly in the largest market for electric vehicles. Also, the fact that ARK Invest bought more shares in the US listed Chinese electric vehicle maker XPeng Inc., just as CATHIE said in the interview. Now all that is left is NIO. It's just a matter of time that they will buy them in bulk. On December 15th, the NIO stock price fell another 4.67%, extending the fall for the third day in a row. The electric vehicle EV manufacturer's stock dropped to new 14-month lows of $29.06 before reversing in a V-shaped pattern to close the day at $30.79. NIO was pulled down by increasing global rivalry in the EV industry, as well as reviving US-China tensions. The hawkish Fed's shift toward 3 rate hikes next year failed to calm Wall Street, which could have boosted NIO stock's late rally. NIO began the week with a choppy session, with shares trading as low as $32.90 and as high as $34.67. NIO stock fell 1.8% to $33.64 at the end of the day's trading. Now, since it's down, don't take this as a loss, yet buy the dip and hold. This is a once-in-a-lifetime opportunity, as when the big institutional investors come into play and the shares will explode. Growth stocks had another rough start to the week, as all three major indices were down for the entire session. The Nasdaq led the way lower, losing 1.39% further, while the Dow Jones lost 320 basis points. Market weakness and higher than expected inflation statistics from last week spilled over into the December 13th session, causing the S&P 500 to drop from its prior record highs. Although the Hong Kong Stock Market Exchange was a red day on October 10th, the Hang Seng Tech Index rose on October 13th as the Chinese government hinted at loosening regulatory restrictions on Chinese tech companies. NIO is likely to decline further in the near term, or are gains looking more likely? According to predictions, NIO stock has a 61% chance of rising in the coming month. NIO stock's longer-term prospects are also improving. In China, demand for electric vehicles continues strong, with NIO reporting record bookings in October. NIO's manufacturing troubles are likewise likely to be temporary. The business has stated that its plans to quadruple the capacity of its Hefei, China plant to 240,000 vehicles per year, with production likely to exceed 300,000 units with extra shifts. The company is also expanding its product line, with the ET7, the company's first sedan, set to go on sale in the first quarter of next year, and 2 more models in the works for 2022. NIO's business's economics are improving as well. The company's net loss for the third quarter was less than predicted, with gross vehicle margins of 18% compared to 14.5% in the third quarter of 2020. NIO stock also trades at a respectable 7 times anticipated 2022 revenues, which is not unreasonable given the company's rapid growth and expanding margins. Electric vehicles are the way of the future, but choosing the appropriate EV stocks can be difficult. Electric vehicle component supplier stocks can be a wonderful way to participate in the EV market's growth. While these businesses' valuations are undoubtedly high, investors are likely expecting that they will continue to develop in the domestic market before expanding into the global EV field, using China's relatively low-cost manufacturing and network of battery and auto parts suppliers. NIO, with a slightly longer track record, higher revenues, and investments in technology like battery swaps and self-driving, may be the safer bet of the three. With this, we've come to an end. Thank you for watching the video. The content in this video is for educational purposes only, and hence should not be considered as financial advice. We all know that the crypto market is highly volatile, and by the time you watch this video, the prices would have changed to a whole new level. So all the financial decisions should be made after doing your wide spectrum research. Also, make sure that you like this video, comment down your thoughts regarding this video, and also don't forget to subscribe to our channel to stay updated about the latest crypto news.